Move on to another question here. So we have from TheLinkPanda. It's a long question here. So, and we're going to have to kind of come back to this as we go. So we have first and foremost, hey, some quick fixes. Chainlink is not a chain and is blockchain agnostic, so it can live on any chain. Link is not dependent on Ethereum. That is an ERC-677 token and CCT cross-chain token. All right, full stop, pause. Chainlink is not dependent on Ethereum as it's an ERC-677 token. What is ERC? ERC is a token standard. Ethereum request for comments. So what does that mean? That is an extension of the ERC-20 standard. Every single Link token was generated and issued on the Ethereum network. Every single one of them, right? They're pre-mined. There's never going to be any more. It is always going to be natively issued on the Ethereum network. Now, with cross-chain transfers and the ability to issue on other chains, that does not mean that they are not still Ethereum-based tokens. They still syndicate all of their security, smart contract interactions, and execution. All of that still is occurring on the Ethereum network because that's the native issuance of the token. So can I use it on AVAX? Can I use it on Solana? For sure. But what's happening when I do that? There is a burn and remint that happens in order for that to be essentially moved to chains and to abstract that value and use that value on a different chain. So what's really happening there? I have Chainlink, that's a native ERC-20 token. In this instance, ERC-677, which is the extension of the ERC-20 standard, right? They're just constitution and instructions. There is a burn and remit mechanism that happens, and you still have to pay gas on the Ethereum side for that. And then still pay gas on the other side of whatever chain you're receiving in. So ETH is still going to be in the picture no matter what. Now, if let's say that that Chainlink has already been bridged and now you're on that network and you already are receiving tokens that were already existing as bridged or wrapped onto that network, great. To you, you might think that you're just natively using it, but somebody at some point had to bridge that natively issued link on that was an ERC-20 or ERC-677 onto another chain. Okay, so let's make that very, very clear. By the way, that was right in your comment there, staring you right in the face, ERC, right? Moving on here, the first 2 minutes and 30 seconds were dead wrong. Let's continue. The last 300 million Link are going back on market, is released to stakers and node operators for services. Only a part of that actually goes back into circulation as people who stake tend to hold. You can stake your Link tokens and earn about 5% of rewards, so that also offsets inflation. So full pause here. You're again leaning into speculation here. You said here only a part actually goes back into circulation is people who stake tend to hold. That is not a guaranteed tokenomic, right? That is your hope and speculative dream based on previous behaviors. But as networks evolve, there's absolutely zero obligation for that existing mechanism or existing behaviors that you're seeing to continue forward. You also said that you can earn 5% in rewards, which offsets your inflation. But we know that the standard inflation is 7%, and when you look at the amount of Link left compared to what we consider to be that 7% inflation rate, it can be really effectively more like 10. So 7 to 10%, but we're earning 5. We're still receiving net dilution. Not saying that it's a bad investment still, but that's just not true. You're not offsetting inflation. You are essentially negating some inflation, but it still, again, results in a net dilution. There's also Chainlink Reserve that accumulates 1.2 million Link a week. Again, that's not a promised metric. That is previous behavior that you're hoping continues and provides you with that sense of security. Now, this last part here, I really don't think that this is something that we argued a lot about. In fact, when I was discussing on the last Ask Matty show about the differences between Chainlink and Flare, which was just a question people had, I don't own either of these, right? I don't own Link or Flare. So I don't really have a horse in that race. I don't have any incentive to say that one's better than another. And we talked about the differences in the fundamentals of the project. And there is a different mechanism in which they operate under. Remember too, that Flare is its own L1. Just big differences across the board fundamentally, where it's not a truly apples to apples comparison, even though they both offer Oracle services. Here you talk about some of the structural situations. So you said chart-wise, the Chainlink chart looks exponentially more bullish than Flare, big accumulation ranges, and a bull flag reaching its final consolidation. Flare seems to just go down lower and lower without any real bottom formation. Market cap does matter, but once again, the total addressable market for Chainlink is substantially larger than Flare, as Chainlink has way more services. Yes, Chainlink does have a larger suite of services, but as we know, Link is not the primary gas that's paid for services. We know that ETH is paid when you're minting or bridging, and you're going to pay in like kind when you move on to the other network. So Link is really still just a small piece of the pie when it comes to paying for services, right? Chart-wise, you're not doing an apples to apples here either, right? We're talking about an L1 that's still a very small cap, still very new, doesn't have as many partnerships. So the upside, when you look at market cap and the fact that there is a lot of value in an L1 that can provide high-level Oracle services, it's not necessarily that one is better than the other. I think that if you wanted to split it down, you could probably do an Oracle blend in your portfolio, right? You're a more conservative person and you want to do, like, let's say 50% Chainlink, and then you want to do some other smaller Oracles. Maybe you want to go with Flare, maybe you want to do API 3 and then Pyth and kind of split the other half into those three. You could approach it that way as well. But I think that the bigger issue here is tribalism. People get so sucked up in my protocol is the best, and every piece that news that comes out, we just glaze it and glaze it. And don't get me wrong, I love it when my projects that I'm invested in come out with some good news, but I don't linger on each and everything as it's the next best thing since sliced bread. There's always going to be innovation in the market. There's always going to be competitors that will come out and offer the same or better services at a lower cost and sometimes a quicker speed. So we have to just acknowledge that this is a constantly evolving market, and tribalism is only going to get us so far. Chainlink is set up potentially for a 20x plus run, right? That is a reality based on the schematics and the charts that we literally did show, right? Everything you're saying in the TA here is something I already said in relations to what we've seen with Chainlink, the breakout backtest behavior, the higher highs and higher lows, no major imbalances being left behind. There's a very safe and structural opportunity to be had in Chainlink right now, but it doesn't mean that by de facto Flare is a bad or inferior opportunity. Everything comes down to risk appetite and your personal allocations.